Hi and welcome to the Market Alert for Tuesday, the 7th of November 2023. So yesterday we see choppy Wall Street trade as eyes turn to Japanese wages and the RBA. The US stocks were choppy on Monday, with the Nasdaq outperforming while the Russell tumbled. Treasury sold off throughout the session to see the majority of Friday's upside reversed on a slew of corporate issuers ahead of supply this week. And bonds pair most of NFP gains on Friday as well. Economic news for today, let's just have a quick look. We've just got 3 p.m. FOMC member Waller speaking. So let's have a look at this choppy session from yesterday and kick off with the Dow. So in the Dow yesterday, you can see it was a fairly quiet session compared to the last few days. Still green at the moment, market above the 5 MA and the 200 MA. Got resistance to the left though that we've looked at for the last few days at 34,146. Let's have a look inside the market. Yes, it's certainly choppy. For sure, morning was choppy, then we had news, then we managed a bit of a rally for the open, and then it was back down and then back up. So yeah, certainly a choppy session. But the weakness continues overnight as the market currently is heading for yesterday's low. So keep an eye on this. It's an important level should the market trade down to test it. And in the implied volatility, let's just have a quick look at this. This is down to 1133 if I recall. Let me just put a label on it for you. And there we can see 1133. So the implied volatility moving down, despite the fact that the market moved down yesterday. They're still sort of controlling the market by obviously selling the VIX at this time. So yeah, the big decline in the volatility there. After we had the last move down to 994, we had the correction kick in, where we've seen 2 waves down, and now when we got to 1629 from the 9.9, we saw the markets move up. Not exactly 100% rise in the implied volatility, but significant enough to stop the market moving lower, obviously, and prices now moving back to the upside. Let's have a look at the German DAX. German DAX down for yesterday, certainly giving back Friday's gains. Been two quiet days there actually. Closing below the 5 MA as well. Needs to stay above yesterday's low, which looks like it's already struggling with. Then you've got the 20 bar moving average a bit lower. 30-minute chart, you can see the decline there most of the day on the downside bar. The opening of the Dow when we had a bit of a rally. Markets are close to yesterday's low already as well. So watch this area. You may get a bounce off this in the pre-market session when the futures open at 7 a.m. In the S&P 500, certainly quiet there as well. And today's Tuesday, which is an interesting day as well, because Tuesday can be extremely quiet because most of the news from the weekend has been absorbed by the market, and therefore there's nothing to really move prices, which obviously is a case that could happen today, as we only have the one economic news item out at 3 p.m. So yesterday fairly quiet. The S&P 500 also looking towards the low, a bit stronger than the Dow and the DAX at the moment though. In the FT 100, another sideways to lower day yesterday, down already on the overnight below the 20 and the 5 bar moving average. And in the 30-minute chart, we had a bit of a move to the upside, probably playing catch-up with Friday, but then this was soon sold into and the market lower. I have no idea why this market finished lower on Friday when all of the others moved higher. No idea at all, but that was the case, unless it's because we're more entangled in the Middle Eastern thing. I don't know, but it's very strange. But anyway, at the moment the market's currently holding above the 200 MA in the 30-minute chart and the low of yesterday as well. In the US dollar, obviously starting to bounce once more, which is going to put pressure on the metals. You can see they're desperate to get back above the 20 bar moving average. So let's finish off looking at the metals. And starting off with silver, you can see that we were down yesterday and already down past the low of yesterday. Like I say, this is still, for me, still going to be slammed to the downside. Unless they stop raising rates, then it will weaken the dollar and the metals can move higher. But until that point, the silver and gold markets are going to be under pressure, despite the demands from central banks. But then it's probably because of that reason. It's pure and simply because using the derivatives to crush the spot price and then to be able to buy it cheaper. So once they've accumulated as much as they need, then you'll see the markets go vertical. But until that point, they're going to continue with the manipulation of price suppression to get as much gold as they can. It's interesting how the market's been focused on this, certainly for the last 2 or 3 years, but they started back in 2010. In the gold market, below the $2,000 an ounce, like I said, they're not going to let it go above that with any encouragement whatsoever. They're going to keep this market below $2,000, carry on as if there's no inflation still and there's no problems. And then in the 30-minute chart, you can see even the decline there overnight. I mean, that's just beautiful suppression of the price. Bearing in mind that the US dollar hasn't moved an awful lot. When you look at the overnight market there, it's barely moved. Whoops, the wrong one. It's barely moved, as you can see, but enough to send the gold price down, as you can see there, a couple of dollars. Actually more than a couple of dollars, down to 1969 when we were at 2000 not so long ago. So a couple of $100 down there. Incredible. And also reversing now. So like I say, expect the metals to continue to be crushed to the downside and manipulated to the downside. And in the gold-silver ratio, silver obviously losing more than gold as the ratio is moving back to the upside. Like I've said before, be prepared for this to go back above 90 and higher. So yeah, we'll see what happens today. Like I say, it's Tuesday. There's no economic news. All of the news from the weekend absorbed into the market. Unless there's something of a geopolitical nature, I expect this market to be fairly quietish from the open. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.